US retail figures are down. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of Heise Says. Still working through my stein of coffee, and I thought we'd have a look at this article about US retail figures and pre-Christmas rush. Now, I'm interested in this because I want to follow up what the Australian figures are over the next couple of months, because I think that's going to have an impact on RBA's decisions in the next 2 months with regards to a new cash rate cut. Now, retail is a big portion of the Australian economy. About 10% of our workforce are in the retail sector. Now, I have had a look in previous videos just visiting dying retail malls, and it's quite depressing. A lot of people are seeing empty retail spaces all around. Anecdotally, people are telling me that. I'm certainly paying more attention to it as I'm driving about. So I think it's an important indicator, and it will let us know where everything is going. We did see a little uptick in consumer sentiment. Okay, it jumped up recently, which is a good sign, and I'm hoping that will flow through to some retail spending, and Australians will start to see some Christmas cheer. But, is the US a foreshadowing of what's going to happen over here? So let's have a look. So, US retailers not feeling pre-Christmas cheer, rattling Wall Street, and ASX may fall. I actually noticed that that silver has gone up as well. Maybe that's a counterbalance. We'll see. On Wall Street, the Dow Jones has retreated from early gains after some weak forecasts from heavyweight retailers. Australian share market figures are also pointing lower. So this is the snapshot at 7:10 a.m. The AS/SPI futures are down negative 0.6% at 6,781. Tuesday's close. The Australian dollar is at 68.25 US cents, 52.85 British pence, 61.61 euro cents, and 74.09 Japanese yen. And US NZ $1.06. I'm surprised. I remember when it was, we were much higher. So the Dow Jones is down, FTSE 100 is up, DAX is up, CAC is down, Eurostock 50 is down, Nasdaq is up, S&P is flat. So Brut Brent is down, spot gold is up. US markets are mixed in late trade, with the Dow weighed down by a fall in Home Depot shares, negative 5.3%, after the home improvement retailer cut its sale forecast for the second time this year. Shares in department store chains Kohl's took a big hit, 19%, as it downgraded its profit outlook and said promotional discounts will hurt its earnings. The downbeat forecasts come ahead of the US holiday shopping season, which begins with the post-Thanksgiving sales next week. I actually saw in Australian media some talk about Black Friday, that American, insane retail holiday. I remember seeing South Park episodes where they were just making a lot of ludicrous fun of it and people going nuts over materialistic things. Let me know in the comments, guys, have you seen a greater pickup in retail activity? Have more people been going to the shopping centres or the shops for Christmas and the big ones? I'll have to go and do some exploring to some of the bigger shopping centres around in Brisbane to see what it's like, to kind of get a feel for the Christmas mood and see if that will be reflected in the retail sales figures. So at the moment, the consumer sentiment is still strong, but that doesn't mean it's going to reflect in every retailer's earnings. Randy Fredwick from Charles Schwab told Reuters. Shares in other US retailers also fell, including Macy's and Nordstrom. Meanwhile, uncertainty over the US-China trade talks continue as Donald Trump threatens to impose even higher tariffs on Chinese goods if a deal could not be reached. Oil prices fell sharply overnight, weighed down by the trade uncertainty and concerns about an excess of global crude supplied. The Australian dollar regained ground after falling yesterday due to the Reserve Bank's meeting minutes indicating the central bank seriously considered cutting interest rates earlier this month. See, this is the thing. People are going, interest rates are going to be low forever, low forever. What happens if the dollar crashes? What's the only lever the Reserve Bank can do to lift up the dollar? What if it plunges down here in Australia? And just think about that. Let's jump over here to one of my favorite websites. If the dollar crashes, all of these products we export are going to be more affordable. Fantastic, great for manufacturers or for mines. How many of those mines are actually owned entirely by Australian companies? How much of the profit is sent offshore? There definitely will be something to look at. I remember reading an article about a new lithium mine in Western Australia that's going to produce all this lithium for batteries, and innovation for the nation. It was owned by a Chinese consortium. Why aren't there Australian companies of the scale large enough to invest and to buy up these companies? Why are people having to go offshore to get a return on these businesses and get money coming in? There's a question for you. I think it's just a sign of our economy that, what are we? We're a house flipping economy with 57% of people's wealth in houses. We dig stuff out of the ground, and we've got bed pans and services. I guess that's it. And coffee. But then that will mean everything we import will get more expensive, and that will have a cost of living increase. Even Trump putting these, threatening to put these tariffs on the Chinese imported goods, that's going to have a hit on the retail sector over there, simply because so much of their goods are manufactured offshore. So let's have a look at what a Reserve Bank was saying. Given that the RBA came close to easing again in November, could you imagine that? Down to 0.5 in November, what would that have signaled? So, and recent labour market and retail data have been weaker than expected. It seems fair to conclude that the hurdle to further easing isn't high, said JP Morgan chief economist Sully Auld. So let's jump over here and have a look at some of the data from the US. So this is US retail sales excluding autos month on month. So US retail trade excluding autos rose 0.2% from a month earlier in October 2019, revising a 0.1% drop in September and missing market expectations of 0.4%. Now, this is actually more important. If you go down here, this is on Trading Economics, you can see what their forecasts are, the consensus, the expectation, and what it actually is. The delta difference, the change between these two figures, that is what is more important. That's what the market tends to respond to. And that's how some traders make money on these type of things. They, particularly if large companies, their profit forecasts are different to what was expected. Retail sales exec orders in the US averaged 0.35% from 92 until 2019, reaching an all-time high of 2.6% in December of 99. And a record low of negative 4% in November of 2008. So if we jump here, let's have a look at the retail sales data. That's it, removing autos, and we can see here with autos in it. So it rose 0.3% from a month early in October, revising a negative 3% drop in September, and beating market expectations of 0.2%. So that is a lift, but you can see how it's been going. Retail sales month on month in the US averaged 3.5% from 92 until 2019. And here we have year-on-year figures. Retail sales in the United States increased 3.1% in October of 2019 over the same month in the previous year. Retail sales year-on-year in the United States averaged 4.35% from 1993 until 2019. So we're still below the average, reaching an all-time high of 11.2% in March of 94 and record lows of 11.5% in March of 2009. I wonder why that is. Let's have a look at Max. I mean, there you go. There's the GFC, guys. There is the GFC, isn't it? So let's just have a quick look at the US economy, and the complexity of their economy is 7th in the world. So, worlds apart from our little colony here on the edge of the world. Look at just all of the exports that they're doing. It's the United States. And look at the imports. But let's have a look at the destination. Their biggest export partner is Mexico, then Canada, and then China. And their biggest import is China, $476 billion, then Mexico, and then Canada. So US putting tariffs on China, affecting that $476 of imports from China, is going to flow through and affect the Australian economy, because remember, China is the source of most of our exports. So this trade war, which may seem removed to the average Australian, just an American thing, Trump's tweets can affect our cost of living and our day-to-day. So guys, let me know what you think. Do you think Australian retail is going to pick up before Christmas. What have you seen? Are you working in the industry? You know, have you gone to your local shopping mall? Are you starting to see people getting quiet or flat out? Let me know. Take care, guys. Have a great day. Like, share, and subscribe. If you enjoy my content, want to help me produce more, I do have a Patreon where you can make a small monthly donation. I have Amazon and eBay affiliate links where I get a kickback like a dodgy seller selling you a dodgy apartment. Maybe I should stop with that joke because it's a bit depressing, actually. And finally, I have a PayPal. Take care, guys. Have a great day, and I will see you later. Bye for now.